Welcome back. It's Outlook 2021 time, and we are getting you the best minds from the market, veterans, to tell you what can be the big themes and what are the big learnings from a rather difficult and extremes that we saw in 2020. Joining us now is Raamdeo Agrawal, Chairman of Motilal Oswal Financial Services. Good morning, Raamdeo. Thank you very much indeed. Have a superb 2021. May it be grand and glorious for you. And for starters, what are the big learnings from 2020?
Very good morning, Lata. And let me wish all the viewers of CNBC TV18 a grand year in 2021. So I think we had we had wonderful year in 2020, which is very unusual given the pandemic situation. But we had a wonderful year. And a lot of surprises, I would say, which is the nature of the market. It surprises you. I would have not thought in December of or January 1st of 2020 that we will have 15% market performance given the COVID kind of a situation. And yet we had 15% index performance in last 1 year. So I think one of the things which I was always practicing and I always believed was that nobody can time the market, and at least I can't do it. So that proved to be absolutely what is called on dot. So buy right, sit right, whatever you like, whatever you understand. That's the way to go in equity markets, not only in India, all over the world. So we had wonderful time of seeing markets collapsing by 30, 35%, 40%, and all the way come back, and not only come back, but complete new high. So, I mean, in 1 year you learn so much.
Absolutely. Well, Raamdeo, one of the lessons we learned in the previous 6 years is that every time analysts start with a high EPS growth number, and by the end of the year you trim it down. In 2020, it was the opposite. People have actually upgraded their earnings after a long gap. Now, the number I did a poll and I got for earnings for FY 21-22 is a solid 30%. I mean, people are approximately 500 rupees this year's Nifty EPS. Next year, the average I've got is 660, which is like some 30% growth. You think that this time around it can be different? We will do that kind of an earnings growth?
Earnings growth will come because this number, what you're talking about, 30-35% growth, is made up of 2-3 very large unusual items which were there in 2020. One is, of course, all the banking losses because of COVID provisions. That will not be there, hopefully. And second is the telecom losses, which the Airtels of the world, they booked in last year. So that will also not be there. So because of all this, 21-22 could be a very good year. And in any case, for last, I think 4 or 5 years, we're stuck at about this 450 to 500 kind of a situation. So it's a long overdue for a takeoff. A lot depends on how government's effort is post-COVID, the build-up of the nation and the budget and the spending in the economy to come back. That will be very important. But yes, I agree. It is very exciting to see what is in store for 21-22.
Okay. Mr. Agrawal, good morning. This is Sonia here, wishing you and your team a very happy, healthy and safe 2021. Hope this year is better for all of us in every way. I wanted to understand from you, according to you, what are the biggest risks that lie ahead for investors in 2021?
Sonia, very good morning. The risks are, if it is known, then it is not the risk. You imagine last year, nobody said on the TV or anywhere that virus will be the biggest risk. So if you ask me, the biggest risk is not being in the market right now, not being participating in the market. That would be the biggest risk of 2021, because there's a lot of fear around. I can see, at least among our clients and our friends, there's a lot of skepticism. And they are selling out of the market. I don't know whether it is very tough to say who's right or who's wrong. But I think the biggest risk in the equity markets is not participating right now, because we have seen the worst of the economic or health disaster, and yet we have done 15%. So 2021 hopefully will not repeat the 20, and I think we should have at least 15% as good a year as 2020 on the whole, and probably it could be a reverse V kind of a shot. I mean, like 2020 was the shot was the V. We went down and then we came up, and in 2021 it could be just a reverse V. So that's the risk of not participating on this exciting journey.
Okay, even as you are speaking, Raamdeo, Nagarjuna Construction is announcing, NCC, that they have won 8,980 crore of orders in the month of December alone. And that's solid, yaar. 9,000 crore orders in a month for NCC. Do you think this can be one of the themes? Not NCC, I mean construction companies like, say, L&T types.
It also depends, Lata, in terms of execution, in the sense that you have the huge order books, but if it is not supported by the budgetary allocation or whatever is the source of funding, if that is not supported, or if the Supreme Court or somebody comes on the way of execution of the projects, then a lot of these good plans remain in paper only. And that I'm not saying something which is anything new, but that has been the history of Indian large projects. I hope the courts will also be mindful of pandemic situation and the unique opportunity India has in terms of building its infrastructure all over the country. So I think it's a very unique opportunity. World is awash with liquidity. Cost of liquidity is zero. In fact, liquidity is looking for some kind of yield. And India infrastructure for local investors as well as global investors, it is one of the biggest opportunity to pump money and build this country and the infrastructure of this country.
Okay, so the team and Motilal Oswal has always been very bullish on the whole rural play, and it's not just some of the FMCG names, but even the auto names. As we speak, some of these names like Escorts are doing really well, reporting cracker numbers in the month of December. Do you think there's still a lot more to go? Are we at the start of some sort of an upcycle in some of these rural plays?
Yeah, I mean, see, one of the things is that we had a bumper monsoon in last 2 years, and we are benefiting from the current year's good monsoon and moisture levels. And second is the low interest rates across, high liquidity, and general rural prosperity because of various prime ministers' initiative to pump subsidies and supports to various segments of farmers. I think there is a lot of prosperity in rural India, and they have also not suffered from COVID. So I think the confidence in the rural economy is very high, and hence rural prosperity is there. So all kinds of cheap, entry-level bikes or tractors and fertilizers, crop protection. So all sorts of things are doing well, and the moment it is supported by their bigger brother, Urban India, which should happen in the second quarter or third quarter of this year. I think we should see synchronized pickup in the demand for all the products which are actually rural centric.
Okay. Raamdeo, will you pick up any of the unlocked trades, specialty restaurants, and now of course even Jubilant has bought Barbecue Nation 10%. Any of them, airlines, hotels, any of them?
Yeah, so some of the industries had a particularly bad fortune or misfortune in pandemic. That doesn't prove any business a bad business. Just because the businesses are closed for 12 months or 18 months because of misfortune, I don't think those businesses are to be termed as a bad businesses. So I think there is actually a great opportunity in looking at some of these great businesses, franchises which have suffered some kind of a loss of output or sales for 3-4 months. I think they will make a huge comeback because what it would do is that setback has really allowed them to cut the cost in various ways, and when the demand comes back, they'll be lean and much more ready to grab. And another thing which has happened in this pandemic is that there's a lot of consolidation. It's almost like a K-shaped kind of recovery, where one third or 50% of the people, smaller outfits have not done well, or they are finding it difficult to recover, whereas the big ones, well consolidated, prepared guys, they are able to grab market share. So you will have a much more vigorous recovery in the successful companies, though they were impacted by pandemic. So yes, I think some of the companies will definitely pick up.
You know, the other day, your colleague Gautam Duggad made a very interesting point. When I asked him what will be your unlocked trades, he said financials actually, because they are, so much economy dependent. Now, we were just running your portfolio. You have all the HDFC guys in your portfolio. Will you stick with this variety of the HDFCs and the Kotaks, or do you think it's time to go down the mid-cap banks, small-cap banks, small finance banks?
Yeah. So, Lata, I think as far as my recommendation would be that lenders are the most vulnerable in these kind of situations. I mean, countries like India, they're impacted by various things. Apart from pandemic, the global forces, weather, and a whole lot of things. So we have to back the companies which have a very good lending track record. And the stress test, the mother of all the stress tests was the COVID period. Like last year was the worst, most stringent test for lenders. So those who survived and those who actually came out clean and stronger, I think those are the ones where we should back in. I can buy a very bad, I can buy a second-rate steel or cement company, but not a second-rate lender. So one has to be very careful, particularly as an investment. As a trade, as a momentum trade, I think rising tide will lift all the boats. So I'm sure the small bank, PSU banks, even not so well private sector banks, everything will go up in this environment. But if you really want to invest and have a peaceful evening, I think it is important to buy quality names.
Okay, I think that's the buzzword, right? Have a peaceful evening or a peaceful night's sleep with your investments after all that we've been through. There are so many new investors who made fresh demat accounts during this lockdown period, and we keep getting requests as to what they should be doing in 2021. In 2020, if you had invested in mid-caps and small-cap funds, you would have made the most amount of money. Do you see that same trend continue in 2021? Would you prefer mid-cap, small-cap funds compared to large caps, or do you think the trend will change?
I don't know about the trend. Trend is going to be your friend, but what I'm saying is that the FIs are clear preference for the large caps because they want to deploy a lot of money very quickly, and hence they have been buying all the large caps. And clearly, the DIIs or domestic investors, they have been net sellers, and that money is clearly rolling into mid and small caps. So clearly, that's the trade on, and most likely this trade is going to continue for at least for some more time, till economic recovery is very clearly visible. When economic recovery comes back, what will happen is that even the domestics will want to buy the large caps. At that point of time, I think if both the segments want to buy large caps, there will be a complete flare up in the large cap again. So I think what is the message is that I would buy quality growth companies, irrespective of whether they are small cap, mid cap, or large cap, and build a portfolio of kind of a multi cap. And because these are changing what do you call that? It's a wind which is changing directions every month, every quarter. So what is important is that you should be well placed. Let the fund manager decide where exactly the next spot where the wind is going to change, and hence multi cap would be the best kind of a bet.
No, I agree with you. I always prefer giving the fund manager full freedom, so multi-cap is always advisable. Raamdeo, it's a pleasure having you with us as always. Thank you very much for joining us on the first day of the new year, and may you have a peaceful and prosperous, a healthy and happy 2021.
Thank you.
Okay, we have to take a break, but